it has been reported that Saudi Arabia has taken a drastic and unexpected financial step by liquidating all of its debt and securities issued by the U.S. Treasury. This sudden move has sent shockwaves through global financial markets, raising questions about the stability of the U.S. dollar, the future of U.S. Saudi relations, and the broader implications for international finance. The decision by Saudi Arabia, a key player in the global economy, to divest from U.S. Treasury securities is a development of significant consequence, and it has sparked widespread concern and speculation. The impact of this action is profound, necessitating a close examination of the underlying motivations and the potential outcomes. Before we delve into the details, please take a moment to hit the like and subscribe buttons for more updates. For many years, Saudi Arabia has been one of the largest foreign investors in U.S. Treasury securities. These investments, considered among the safest in the world, have been a cornerstone of the kingdom's strategy to preserve its wealth. By purchasing U.S. debt, Saudi Arabia ensured that its vast oil revenues were securely invested in an asset that was not only highly liquid, but also backed by the full faith and credit of the United States government. This arrangement symbolized the deep political and economic ties between the two nations, a relationship forged in the mid-20th century, when the United States provided security guarantees to Saudi Arabia in exchange for a stable supply of oil. However, the decision to withdraw from U.S. treasuries is as much a political statement as it is a financial one. It suggests a potential shift in the geopolitical landscape, where Saudi Arabia may be reevaluating its long-standing alliance with the United States. This move could be seen as a response to several factors, including changes in U.S. foreign policy, the global energy transition, and evolving dynamics in the Middle East. By reducing its exposure to U.S. debt, Saudi Arabia might be signaling its intention to chart a more independent course on the global stage. One possible motivation for this divestment is Saudi Arabia's desire to reduce its dependence on the U.S. dollar. The kingdom may be taking steps to protect itself from the risks associated with the dollar's dominance in international trade, especially given the United States' ongoing struggles with rising national debt and inflationary pressures. Concerns about the long-term value of the dollar have been exacerbated by the United States' aggressive monetary easing policies, particularly in response to the COVID-19 pandemic. By selling off its U.S. treasuries, Saudi Arabia may be seeking to diversify its foreign reserves. The kingdom might be looking to alternative assets such as gold, cryptocurrencies, or other currencies to safeguard its wealth against potential dollar depreciation. Additionally, this move may be part of a broader Saudi strategy to reduce its reliance on the United States. The kingdom has been increasingly pursuing an independent foreign policy, as evidenced by its recent efforts to strengthen ties with China, Russia, and other emerging powers. These relationships offer Saudi Arabia new opportunities for trade, investment, and security partnerships that do not depend on U.S. involvement. By divesting from U.S. debt, Saudi Arabia may be sending a message that it is looking to diversify its alliances and assert its sovereignty in the global arena. The timing of this decision is also significant. Saudi Arabia's divestment comes at a time when the global energy market is undergoing significant changes. As a country that relies heavily on oil exports, the kingdom is acutely aware of the global shift away from fossil fuels and toward renewable energy sources. With nations around the world setting ambitious targets to reduce carbon emissions and transition to clean energy, Saudi Arabia faces the challenge of adapting its economy to a post-oil future. The sale of U.S. treasuries may be a way for the kingdom to raise funds for its ambitious Vision 2030 initiative, which aims to diversify the Saudi economy by investing in sectors such as technology, tourism, and renewable energy. U.S. foreign policy under the current administration may have also influenced Saudi Arabia's decision. In recent years, there has been a noticeable shift in the U.S. approach to its relationship with Saudi Arabia. The United States has become more critical of Saudi policies, particularly regarding the war in Yemen and other human rights issues. The U.S. Congress has passed resolutions to limit arms sales to Saudi Arabia, and the Biden administration has signaled a willingness to reassess the U.S.-Saudi alliance. These developments may have led Saudi leaders to question the reliability of the United States as a long-term partner, prompting them to reallocate their financial resources. The repercussions of Saudi Arabia's sale of U.S. Treasury bonds could be far-reaching and potentially disruptive to global markets. First and foremost, this move could lead to an increase in U.S. interest rates. When a major holder of U.S. debt sells off its holdings, the market is flooded with Treasury bonds, which can drive down their prices and push up yields. Higher yields on U.S. Treasuries could, in turn, lead to higher borrowing costs for the U.S. government and potentially for consumers and businesses as well. As we continue to monitor this situation, it's crucial to stay informed about the evolving dynamics in international finance. Saudi Arabia's decision to liquidate its U.S. debt holdings is a reminder of how interconnected global economies are and how actions in one part of the world can have ripple effects across the entire financial system. The decision by Saudi Arabia to liquidate its U.S. Treasury securities could have far-reaching implications for both the American economy and the global financial system. One immediate consequence of this move is the potential rise in interest rates within the United States. As Saudi Arabia sells off its bonds, the increased supply in the market could drive bond prices down and, in turn, push interest rates higher. Higher interest rates make borrowing more expensive for American businesses, consumers, and the government itself, which could slow down economic growth by reducing spending and investment. Moreover, Saudi Arabia's actions could set a precedent for other nations holding large amounts of U.S. Treasury bonds. If other countries begin to follow suit, this could trigger a larger sell-off in the bond market, leading to an even more pronounced increase in interest rates. The ripple effects of such a scenario could strain the global economy, especially if the U.S. is forced to offer higher interest rates to attract buyers for its debt. Beyond the immediate financial implications, Saudi Arabia's decision could also challenge the U.S. dollar's status as the world's reserve currency. For decades, the dollar has been the preferred currency for international trade and finance, largely because U.S. assets, like treasuries, are seen as stable and highly liquid. However, if a significant holder like Saudi Arabia begins to move away from the dollar, it could inspire other nations to reconsider their reliance on the U.S. currency. Over time, this could erode the dollar's dominance, diminishing the United States' ability to influence global economic policies and borrow money at favorable rates. Such a shift could have profound implications for the global financial system, potentially leading to greater instability and uncertainty. Saudi Arabia itself would face significant economic impacts from this decision. In the short term, the kingdom may realize capital gains from selling its U.S. Treasury holdings, particularly if it purchased them when interest rates were lower. These funds could be redirected towards domestic investments as part of Saudi Arabia's Vision 2030 strategy, which aims to diversify the economy away from oil dependence. However, this move comes with risks. If the alternative investments do not yield the expected returns, Saudi Arabia could face financial difficulties. Additionally, by reducing its holdings of U.S. debt, Saudi Arabia loses a reliable and low-risk source of income, which could affect its ability to fund government expenditures in the future. On a geopolitical level, Saudi Arabia's actions could signal a shift in its alliances within the Middle East. By selling off U.S. treasuries, the kingdom may be indicating a desire to distance itself from the United States and strengthen ties with non-Western powers like China and Russia. This realignment could alter the balance of power in the Middle East, as both China and Russia have been keen to expand their influence in the region. For example, Saudi Arabia and China have been discussing the possibility of pricing Saudi oil in yuan rather than dollars, a move that would significantly undermine the petrodollar system, which has long been a cornerstone of the U.S. Saudi relationship. Similarly, Saudi Arabia has developed closer ties with Russia, particularly through their cooperation in the OPEC+ alliance. By coordinating oil production cuts, Saudi Arabia and Russia have exerted significant influence over global oil prices. If Saudi Arabia continues to distance itself from the United States, this alliance with Russia could strengthen, potentially leading to a new axis of power in the global energy markets. Such a development could have a major impact on global energy prices, especially if Saudi Arabia and Russia decide to use their combined market power to pursue strategic objectives that conflict with Western interests. The U.S. response to Saudi Arabia's decision will play a crucial role in shaping the future of their bilateral relationship. Washington may view the sale of U.S. Treasury securities as a hostile act, leading to a deterioration in relations between the two countries. Alternatively, the U.S. could seek diplomatic engagement to understand Saudi Arabia's concerns and find ways to maintain the alliance. Given Saudi Arabia's strategic importance in the Middle East, particularly in terms of energy security and counterterrorism, the U.S. is likely to aim for a balanced approach that prevents a complete breakdown in relations. Another critical factor to consider is the reaction of other major holders of U.S. Treasury securities, such as China and Japan. These nations will be closely watching the impact of Saudi Arabia's decision. If they interpret it as a sign of declining confidence in the U.S. economy or its geopolitical standing, they may also consider reducing their holdings. This could create a domino effect, leading to a significant shift in the global financial system. Countries might seek to diversify their reserves, moving away from U.S. assets and instead investing in gold, the euro, or the Chinese yuan. Saudi Arabia's move could also be seen as part of a broader trend toward deglobalization. In recent years, there has been growing skepticism about the benefits of globalization, fueled by events such as the COVID-19 pandemic, the 2008 financial crisis, and rising geopolitical tensions. As a result, countries are increasingly prioritizing regional alliances and self-sufficiency over global integration. For Saudi Arabia, this might mean focusing on building a more resilient and diversified economy that is less dependent on external factors, particularly the U.S. dollar and the U.S. financial system. Domestically, this shift toward economic sovereignty could lead to significant changes in Saudi Arabia's policies. The kingdom is likely to accelerate its efforts to develop alternative sources of revenue, as outlined in the Vision 2030 plan. This could involve increased investment in sectors such as technology, renewable energy, tourism, and infrastructure, with the goal of establishing Saudi Arabia as a hub for commerce and investment in the Middle East. However, financing these ambitious projects by selling off U.S. treasuries could introduce new risks to the Saudi economy, particularly if the expected returns on these investments do not materialize. Please hit the like button and subscribe to our channel if you enjoyed this video. Could you also let us know what effect you believe this will have on the world economy in the comments section below? We would like to talk to you. I appreciate you watching, and I'll see you later.